is up, everybody? Welcome to the AssetDash podcast. Today we have Sharky. Super excited about this project. I think what they're doing is really going to revolutionize the NFT space, and they're solving a really core problem. So we have Ria and Anton, who are two of the founders of the company. To get things started, which one of you want to take what is Sharky and go into details about the problem that you're solving?
Hey, thank you for having us. I think Ria should take it.
Hi, I'm Ria. So Sharky is a decentralized lending platform, and it allows you to use your NFT as a collateral, which brings liquidity to your JPEG. Something that I think a lot of people are very excited about is that they see a new mint going on, they see a new financial opportunity, and they're saying that they're illiquid, but they're rich in JPEGs. And this now allows them to access that without having to paper hand, which protects all of our bags.
Yes, and I was really excited about this. So I came across Sharky at Solana Hacker House, ended up throwing a small angel investment, so full disclosure there as well, because I see the problem that they're solving. There's a huge liquidity problem, obviously, in NFTs. I think the loan component of NFTs, that segment is only going to grow. We're still in the first innings in NFTs in general, but from a liquidity standpoint, I think we're in inning 0. So I guess to start, what does Sharky do differently from a loan perspective compared to the other players in the marketplace?
Yeah, good question. So I think there are several sides of this. One, the liquidity is instant for borrowers. So when they come to Sharky, you can take out a loan literally in like 3 clicks. And people really like that experience. Two, we have order book model for lenders. And I know it's a complicated technical term, I guess. But what it means is that lenders can put effort and turn that into profits. And it's kind of like a layer 1, we call it layer 1 protocol solution, because it's a superset of like liquidity pools and similar kind of like approaches. We can manage liquidity on somebody's behalf and turn it into passive income. Or we can allow somebody to come to Sharky and kind of like trade actively and make more. And I think that's a big differentiator for lenders. Other platforms make you choose, like either you're doing super manual or you kind of like turn it like doing super passive. And we in between combining the two. NFT stays in your wallet, also important. So you don't lose access to Discord, you don't lose benefits like airdrops, whitelisting exchanges, and all of that. Did I miss anything?
I was going to say that when lenders come to the platform and lend on Sharky, they make all of the profit.
Yeah, so I kind of want to go into detail from like a user experience perspective. What does it look like if I want to go and borrow? And then if you can just give that same, narrative, what does it look like if I want to go and lend? How do those two user experiences, what do they look like?
Yeah, so when a user puts NFTs in their wallet, comes to the platform, they connect their wallet, and we instantly show them what are the offers they're going to get for the NFTs in their wallet. So they click on borrow, they see all of their NFTs and the current best offer for each one of them. They can click on the borrow button, and it shows them the NFTs in that collection that they own. And they can actually just take out a loan right there, 1 click, and it's in their wallet. And then to that effect, the NFT also stays in their wallet, and it doesn't actually go into an escrow, which is really great. But yeah, that's the borrow flow. When they finish taking out the loan, so that after they click confirm, the page will show add to calendar, and we're actually rolling out with notifications very soon. But this allows the borrower to be a lot more responsible. We're really, really excited about how low our default rates are, because that means that we have really responsible borrowers, and we create a really good user experience so that people can actually track when they have to pay back their loan by. Currently, we have fixed term loans. So that's 2 weeks for you to like play with the money and then pay back your loan.
And then on the borrow side, it's on a collection on both sides, it's on a collection basis. So neither side is really taking into account the rarity. You're basically just taking a bet on what you think the floor may be.
Exactly. Yeah. So we're not trying to like address like a rarity problem. We're trying to address problem of like, I need a loan like right now. how can I get it? I'm okay with that not being accurately like valuing my precious NFT, which is like super subjective anyway. So yeah, think about like liquidity pool. So like we call it order books per collection.
Then on the loan side, I guess what type of characteristics are you seeing from the users today? I guess one general assumption would be people going to the platform and trying to take out a quick loan to participate in another mint. Do you think that's a user activity that's becoming, very popular, or is there other things that you're seeing in the marketplace that the average NFT investor may not be privy to?
Great question, and we actually
go for it.
And we actually we will be starting private alpha groups to share more and more of this insight. This is primary area of our research, like why people taking loans, like what are they doing with those loans? Yeah, do you want to take the why?
First of all, I just think that's really, really fascinating to me because it's a much more high conviction play when you're taking out a loan to do something with that money. You're not just like, okay, I have some spare cash laying around. You're like, actually, I'm willing to bet on this. So then you take out a bunch of loans, and we've seen, whales hit the platform and like they'll take out 15 loans at the same time on a blue chip. And then they go and we actually just go watch them. We go whale watching on Sharky. And it's really fun because we're like, okay, which floors are they sweeping today? So I think that even though there are many use cases for instant liquidity, I think one of the primary ways that people are finding out about Sharky, because they're sharing Sharky to their alpha groups about the secret sauce that they're using to be able to make big plays. They're minting and they're sweeping floors on dips. So I think people are making a lot of profit using Sharky because they can actually just multiply their profits.
That's super interesting. And I'm curious to see how that trader community around the platform starts to develop.
Yeah, for sure. And we also seen use cases like people trying to arbitrage. They would take out a loan from one collection and provide liquidity to another one if it has higher APY, because our APY rates or interest rates are different per collection. Yeah. And sometimes we've seen use cases like when probably they would not make a successful trade, but there's a time comes to repay a loan. We have mostly 14-day loans and 7 days for younger collections and newer ones. So they would take out another loan and repay their old one.
That's
really interesting. And what collections are you seeing the most activity on?
Heads down, OK Bears as of last month. SMBs are going strong, famous foxes. I would say those are top 3. And everything else is kind of variable. It's surprising, but it's kind of it's not it just a uniform stays similar. It's sometimes it spikes and DigiNapes would come and take out lots of loans, and sometimes they would stay quiet for a week. So it's kind of very community, I guess, influence driven.
And I'm seeing 260% APY here on OK Bears. Where is that coming from?
That is demand and supply driven. So the more orders or offers available in the pool, the lower will be APY. But the higher demand, the higher will be APY. So kind of when liquidity drains and goes to zero, APY grows to incentivize more lenders to provide that liquidity. We're working on kind of a lot of platforms use static utilization curves when it's just let's say Mango markets, when pool goes above 70% utilization, it starts growing rapidly. Our approach is more complicated. One of the RIAS ideas, it's kind of velocity based, if it makes sense. So there is a time element to it. If we see lots of offers been taken rapid succession or quickly, maybe with upcoming mint, hype mint is coming up. So APY will also grow to incentivize kind of higher profits for lenders.
And is there a plan to have some sort of liquidity mining type component around there at some point?
We haven't called it liquidity mining, but it would be similar. We'll be able to take larger LPs and be able to manage funds. So effectively the same thing.
Amazing. And now I wanted to get your thoughts too on the space in general. More particularly, there's been Solana outages as of late. What are your thoughts on those general outages? Do you still see a long-term path where these things get solved? And then how has it affected the platform and the user experience, if it has?
I mean, obviously, like it's bad. Everybody is suffering. Like it's kind of like every platform, because like we need to come up with workarounds for users to, and users like tend to, not all of them, but like misattribute like the problem. Like, hey, I cannot repay my loan. Like, am I gonna lose my NFT? Like, they start seeing this as Sharky's fault, which is a really difficult position to be as a business, because it's not anymore like a pet project. Like we have like people putting like real assets on the line. So yeah, we came up with like quite a few like security like measures. Like when Solana is like really down and like underperforming, we're trying to like extend loan terms or disable foreclosures and like help users in Discord kind of like to make sure they feel safe. Like they can still repay loans after Solana is up, or like transactions are going through. But it's definitely a challenging situation. So I'm trying to help like anywhere I can, like Discord, like talking to like Solana devs periodically. Like it's a complicated problem they're trying to solve. It's super impressive. Like I think nobody in the world have solved those types of problems. But definitely a challenge.
So anytime you have like users on both sides, where you're not just like as a company able to say, well, okay, we'll do like a loan forgiveness or something like that, or like an extended grace period, because you also have a lender on the other side for whom it might not be fair. So I think anytime that you have a situation like that, you just have to consider UX that like accounts for both. And for us right now, I think lenders have actually been really understanding when we say that Solana is down, people can't repay their loans, and we're going to extend the grace period. They've been actually just very understanding, which is cool.
Amazing. It's just like a unique position, because the NFT community on Solana it's top tier, right? I think the engagement and the energy, I think to start this on any other platform but Solana, would be difficult, because you're able to tap into that community excitement. With that in mind, though, is there plans to go multi-chain for Sharky, or is the goal to be Solana specific?
I think multi-chain as an experiment. We recently applied for NEAR grant. Like depending how that goes, like we'll try to prototype. Like it's a growing chain, like even younger than Solana. Considering heavily Ethereum, there is more competition on Ethereum, but also bigger market. And in my mind, like borrowing and lending, it's not winner takes all. There always will be competition. There always will be competing products, and you can always compete by like interest rates and financial models and kind of like optimizing this like more and more. So it's definitely consideration, but first we want, I think, to make sure we're one of the best players in Solana. Our product like works really well, and we get a lot of feedback already. Like, oh, user experience is amazing, which is what we focused. And we and I like almost like embarrassed. Like we're proud in a lot of ways what we've built and what team have built, but like the bar is very high, so we still have a long way to go to deliver what we believe is like really good experience.
That's super interesting. I think one of the components with the different chains is you're going to still run into issues. Each one has its own kinks, right? So with Ethereum, it's generally the gas fees is what people complain about. Solana has like this really good mix where you don't have the high gas fees and you do have this major NFT community, right? And then even flipping Magic Eden flipping OpenSea as of late with transactions.
Mm-hmm.
So what are some things that you can share upcoming for Sharky? Like where would you want to see the platform over the next few months, and what are some of the items that you're focused on?
So we're going to be dropping an NFT, and that's really exciting. That's about as much as the Sharky community knows. We haven't revealed too much about it. Everyone knows that because we're a loan platform, we're obviously going to have utility. But I think what we're going to be doing is going to be very different, actually challenging a lot of the ways that people think about an NFT that they hold and what are the reasons for holding. So that's something that I'm ultra excited by. If you haven't seen on our platform, we have reward points. So they're called Sharky points, things that you can, if you're transacting on the platform today, you're earning. And these points help you get into the whitelist. And if you earn enough points, you can actually get the NFT for free. So people are really excited. They're racking up points. And it's one of the ways that we re-engage with our users and really reward them for their loyalty and reward them for just continuing to transact with us.
Amazing. And then from launch to now, I know you've mentioned that you've seen the volume continue to uptick. Is there a particular reason why you think that's happening? Is it just more adoption or more interest that's taking place and more people finding out about the platform? Has there been certain iterations based off of user feedback that you think is leading to that?
I think it's both for sure. Yeah. Yeah, it's like on borrower side, I think it's mostly like people like learning what borrowing feels like. We were first, I guess we were first to provide this experience to like instantly lend. There was like another platform. Yeah, go ahead.
We're the first to provide instant borrowing. And right after, we were the first loan protocol in the world to provide escrow-free borrowing. So they are also able to not only get their money instantly, but not lose sight of their collateral. And then I think on the lender side, we also made some improvements. That's what drove up like lender adoption. We started including lender tooling so they can look at the order book, look at the current loans, anticipate using that. The whole point of an order book is price discovery. So each lender's contribution helps the lender economy as a whole. And then on top of that, now we don't take any fees from the platform. So lenders just like come to Sharky and they make money, and they know that everything they make goes back to them.
Yeah, and I was trying to say like borrowers are still learning. We see people asking questions in Discord periodically, like assuming they can, it's a borrower initiated flow. They can come and say like, hey, how can I deposit my NFT so I can get a loan? I'm like, oh, it's vice versa. You can just like come and take out a loan. You don't need to like.
They're kind of like, how long do I have to wait generally for a lender to accept my offer? We're like, no, you accept the offer and you take out the money right now.
Yeah, and another confusing aspect, like, which is, confusing in a good way, like surprising, like that NFT stays in the wallet, like users are trying to ask, like, well, wouldn't I be able to like just trade it or sell it on Magic Eden? And like, no, it's frozen. And so there's very little understanding of the concept of frozen NFT. So that's a new tech, I guess, a new approach. So it's that familiarity with that, it's still growing. I want to see the future of like staking platforms and other like protocols like to doing this like escrowless or non-custodial or whatever the term for that. And we're like pioneering.
Yeah, I would say in general, we're innovating a lot in this space. And that's also one of the reasons why we have to be Solana first before other chains even catch up in technology that allows us to do this. And Solana is really built for utility. So we're going to really hit home runs on utility first.
That's amazing. And then how do you see this playing out with staking? Is there even a way now if your NFT stake to also be able to, put it out for a loan? How does that work?
So there are really interesting protocols like what Cardinal team has developed, for example. They open source like staking protocol, and I think it's a really good one because it also allows you to keep an NFT in your wallet while you're doing staking, but doesn't allow to list on marketplaces and transfer. We're planning to integrate with that. We're planning to kind of like if it's frozen through staking, you can still borrow and lend on Sharky. So primarily borrow. But it's complicated because the market for staking protocols is very diverse. A lot of teams build their own staking because it's just easier to fork some open source like tools and like provide custom functionality, even though like most of them don't have custom functionality, but engineers. It's like, I want it to be flexible. So I'm going to do my own thing. But I think it's going to be huge, like first collection that will partner with us to provide both borrowing and staking at the same time for their users. That I think that's a huge utility. And
in general, with the current crypto bear market that we're currently experiencing, it looks like Solana NFTs at least are not in a bear market.
Not at all.
Not at all. Yeah. So on your side, I guess, what are you seeing from the Sharky perspective on the bear market and then NFTs in particular?
Yeah, just like you said, we're betting on Solana as a team, as a company. So like all the loans are in Solana. It's not in USDC. So one Solana is one Solana. In absolute terms, platform is growing really quickly. Loan volume is growing, like activity, and like it seems like there's this community that's not impacted by bear market, and I think it's true. We see the evidence of that. But yeah.
Maybe inspired by the bear market. When the bear market happens, everyone buys NFTs.
Yeah. Everyone buys NFTs as a hedge. And I think what's really interesting too is that the core community that's here, they're becoming those early adopters of Sharky, and you really want that motivated, excited base to really, kick things off and grow the platform. Where would you like to see the platform in a year or 2 years? And where do you think NFT loans as a whole, like what form do they take on in the marketplace from like a big picture perspective?
I think eventually two things will happen. Market will become less volatile. That will probably take a few years, given the trends. And then we'll start seeing longer, like safer loans, like not necessarily longer duration. It's already possible to do like indefinite duration. But we will see more and more kind of like loans that are like close to value, like 70-90% of collateral, and you can take those loans for like a couple of months and not worry about like liquidations if price drops or anything like that. And we'll see markets starting competing on interest rates, because ultimately that's how you win borrowers. The better risk model wins, kind of. And we'll see more and more. And I see custom loans and instant loans here to stay. I think there will be a combination of those on the market. I don't think liquidity like ours, like instant liquidity platforms, like replace peer-to-peer marketplaces, and I don't think peer-to-peer marketplaces replace what we've built. I do see a lot of like synergy and like maybe emerging like combinations of both. We have some ideas that are still in stealth, like how to combine, like how to make borrower-initiated flow more exciting for lenders than peer-to-peer marketplaces, for example. And we will start seeing, I think, like liquidation mechanisms for defaults. Even though our default rate is really low right now, all markets, I think, naturally go through cycles, and there will be like an NFT market crash at some point of some form, and a lot of NFTs will lose their value, and there will be some collections will rack, something will happen, some liquidation cycles will be there. And there's a lot of innovation that needs to happen on the liquidation front as well, because ultimately we don't want protocols like us to just go to marketplace and like list NFTs below the floor and lower the floor for collections. That's not what we do. And yeah, there's that area, like companies will be built around liquidations. We already have seen this on Ethereum.
And do you see a world where people are getting their NFTs appraised in a way, kind of like a house, and getting like a professional person to put a value on it and then going and doing the loan process that way?
Oh yeah, that already is working on Ethereum, because there are so many like really, really high price NFTs that literally like more expensive than houses even in like most expensive cities in the US. On Solana, it will happen that when market expands and NFTs become more and more valuable, that is a natural consequence, I guess. But we've seen more and more right now experiments of what I call it like social/crowdsource appraisals. When there's like clever ways to like put NFT on the market and create microeconomy incentive systems like for community to appraise it. Almost like auctions, like we do this like with order books, but there's other mechanics, for example, to discover price basically.
I actually think that the lending order book is a much more surefire way to appraise than what you currently see as floors, because the floors can be arbitrarily high. It could be manipulated. And you generally, when you look at the floor, you actually try to like look at transaction history on Magic Eden to see if that people actually have been buying and selling at that price. And sometimes you'll see that there are transactions below that price, and that's just like what people are listing it at. Whereas with lending, people are actually putting money up. They're locking in liquidity for that. So that's a much stronger signal. And we're going to soon be able to use loan ceilings as another price sort of signal instead of just relying on floor price.
And it's going to help with price discovery in the process, which is really cool.
100%. Yeah.
And then one more question. I honestly probably should have started with this, but I know both came from the Slack ecosystem initially, right? As you were working together on a Slack project. How did you both get into cryptos and NFTs? And what was that aha moment when you decided I want to do this full time?
Yeah, I came like just like as a I was into like Ethereum and Bitcoin kind of like as a observer investor. Like I had some prototypes on Ethereum, but never built a company or like anything serious. Then in July, a friend like sent me like a white paper and kind of like, hey, check this out. Like that's a cool technology, cool chain. So I read white paper. I listened to podcast with like Anatoly, like describing like thought process about Solana architecture, kind of like the vision. And in that sense, I'm a very intuitive person. To me, it made sense. Like just general thinking and differences in like positioning in the market and technology and like focus on developers. It was important for me to hear that the chain and Solana Foundation and Solana Labs like care about like engineers first. And trying to bring more and more engineers, and that's how platform succeeds. And then I got into NFTs. My first reaction was like, I don't get it. That seems strange, but clearly there's a huge market. I don't understand why people are trading and investing in those, but I want to understand. Took me about a month to kind of like come up with explanation what NFTs are that my parents understood. And then I realized like on Solana, there are no financial products for NFTs, at least in November, there were none. And lending is just one of the like natural things that happens like when market becomes more and more efficient. Like in lending allows for additional leverage, and in crypto you can create like multiple layers of that. So yeah, that was the thinking like, well, I want to build something for NFT space because it's exciting and emerging, like the coolest tech, the newest technology, and financial products seems like a good challenge.
Yeah, from my perspective, I've always wanted to build something in fintech, and I realized that this is actually not something that just is fun to build, but it's also something that's necessary for NFTs to have financial staying power. They aren't really an asset until people start treating them like a real asset, and this actually gives NFTs the ability to grow beyond like what their natural ceiling would have been if like they were just JPEGs that people collected for fun. And this gives them that component of liquidity. And we're going to see a lot of like new abstractions built on top of this that like free up even more and allow you to speculate even more on their value, which I think is like super cool. Like my entry into this space actually was as an advisor in some DeFi, NFT, and gaming projects, both on Ethereum and Solana. And learning from a lot of my crypto teams in this way, I was just like blown away with how much they were learning. And naturally, I just actually wanted to go into a space where like I didn't know very much about, and then pick up and just like completely dive super deep.
Amazing. Well, I'm super bullish on Sharky, and I think NFTs now, it's really just getting started. I was listening to a Punk 6529 podcast, and he had a really good line where he stressed that NFTs are crypto's consumer moment. And I really feel that way. You're seeing a whole new group of people get into NFTs that never had interest in Bitcoin, never had interest in Ethereum or DeFi tokens. And it kind of makes sense. I think there's two components. One, you have like the imagery component of people actually like liking the art, but two, you have the community component. And we're starting to see NFTs become digital memberships, which I think is super cool. But even when you look at the fact that there's not these fintech and finance tools for NFTs, there's actually, I think, a lot of compression in the market from like a valuation standpoint. You know, you take Doge. Doge still has, I think, what, a multi-billion-dollar market cap. You can look it up real quick. Pretty sure it does. But the market cap of Solana Monkey Business is 32 million, right? And I think a big part of that is the fact that you don't have tools like the loans, like the ability to borrow, like the, you know, fractionalization. It hasn't gone like mainstream yet. You have to buy one. And when you can only buy one and you don't have those liquidity options after that, it cuts out a lot of the potential people who can participate. And now these tools like Sharky are starting to come to the forefront. And I think that's going to change it. And yes, Doge, $10 billion market cap. Solana Monkey, 32 million. So I think we're super early. And I think what Sharky is doing is fantastic. And it's a huge step in the right direction, especially for an NFT community like Solana, which is extremely active and engaged. So keep crushing it. I'm sure the AssetDash investors and users on the platform are going to love this. We have a huge Solana NFT community as users on the app. And yeah, looking forward to getting this out.
I think that there's one additional thing that you might be excited about. We have lenders coming over from ETH and moving Ethereum into Solana so that they can get some exposure to the Solana blockchain and the Solana NFTs before they're like ready to like dive right in and, invest in the rate that they sweep floors at. That's pretty immense. But first they were using Sharky as an educational tool to learn about the NFTs and the volatility.
And that's a great way to do it. That's like a good first step. I guess one more question on that. Why do you think OK Bears was that project that was able to really bridge the gap there? Is there anything in particular you saw that, I guess, drove the ETH people over to Solana? Because I feel like that was a turning point.
I think one, OpenSea came to Solana, and I think that already brought awareness. And two, I think the OK Bears founders were already like thinking about this as their avenue. I think that they were already well connected in Ethereum. They knew how to advocate for Solana NFTs to the Ethereum crowd. They knew what kind of art to provide to like catch their eye, and they knew the meta that was on Ethereum that would be like easily catching on. I think a lot of the ETH whales were not really quite used to Solana NFTs being utility based. I think they were like more used to the branding meta, right? And so they came to Solana, they like saw the art that they liked, and they started buying some OK Bears, and they started buying more OK Bears. And I think that really is what drove the price up. Whereas if they knew more about Solana utility, then like I think they would have like kind of spread out a little bit more. But I think they're starting to get more aware about that.
Yeah, I definitely agree. I think it's right now we're in the age of brands for NFTs. Age of utility is coming. I don't think it will replace brands. It will be additive. And recently I went to like a dinner when I heard OK Bears founders talking to others. I didn't have a chance to talk to them because I was talking to other people. But I actually heard that question. Somebody asked, like, why do you think your project was so successful? And I think they responded something like, well, we didn't know it's going to be so successful. We focus on brand building, but it like 10x'd our expectations.
This is why you have to listen to the AssetDash podcast. You get the direct alpha from dinner conversations. Well, both of you are awesome. Keep crushing it. We'll definitely keep following the progress and get everybody informed about all the good things that are happening at Sharky. So thanks a bunch.
Yeah. Awesome. Thank you for having us.